Happy New Year! What's going on, residents, potential residents of Sherwood, Oregon, or whoever lives out there and wants to know about Sherwood, Oregon real estate? Well, stay tuned. We're going to talk about Sherwood, what happened in 2021 for the real estate market, and what to expect in 2022 going forward. So stay tuned and talk to you soon. Hey guys, what's up? It's Alex Clark, the Clark Group, Keller Williams Realty, Portland Premier. Excited today to talk to you about Sherwood, Oregon, and what in the heck happened in the real estate market in 2021, and what do we anticipate going into 2022. So stay tuned, check it out. We'll get to the point here. Market Action Index report is something that I follow really closely. It effectively quantifies how hot or strong of a market we're in, if it's a seller's market, or how cool or weak it is if it's a buyer's market. Anything above 30 is a seller's market. Anything below 30 is a buyer's market. Pretty straightforward, right? So starting out in 2021, Sherwood on a 90-day average had a number of 58. And at the end of 2021, we were at 80. The market got hotter, right? And that's the highest point that we've started a year at any given time. So good things to come for Sherwood, potentially. We'll take a look. Median list price. Sherwood's always been this funky little graph, to be honest. It peaks real strong late in the year, and then it's like this slide from spring to winter, and then it peaks up again. It's pretty interesting. But median list price, no real story to tell there. Average days on market, quite simply, guys, it's taking less time to sell houses. There's a lot of reasons for that. One, the demand's higher. Two, there's more information out there readily available to consumers. The photos are better. We now have Matterport, 3D walkthroughs. Some agents like us are using actual 2D floor plans. It's easier to get into the homes. There's a lot of factors moving in, but the end of the story is things are taking a lot less time to sell in Sherwood. Price per square foot, anybody that owns in Sherwood, you're going to be really happy to see this screen. We started the year in Sherwood with a price per square foot of $261 a square foot. And at the end of the year, we were averaging $312 a square foot. So $50 a square foot year over year, that ain't bad. That's actually pretty exciting. Now, there was a plateau here. Most of the gains happened early in the year. We anticipate that to happen this year as well, because what the Fed's doing and what are going to happen with interest rates, those are probably going to kick into effect in the middle or third quarter. Stay tuned on that. Properties with price decrease. People are always surprised that I bring this up, quite honestly, but in a healthy market, roughly 30% of the homes that are on the market have incurred a price reduction in order to sell. And it's no different in the hot markets. There is just a natural thing that happens where some people get a little bit aggressive and they overprice the home, and then they have to adjust in order to come into market in order to attract the right buyer to look at the house. And as you can see, as evidence, that's what happened last year too. At the peak of 2021, there was about 38% of the homes on the market at that time that had incurred price reductions. And that's really surprising to a lot of people, but it is indeed happening. Lastly, inventory. This is simply the amount of houses that are available to purchase or that are on the market being sold. And it's the same story. Inventory is continuing to drop. What happens when there's no houses for sale and a lot of people want to buy houses? Prices go up. And that's what happened in 2021, quite honestly. We saw significantly historic lows of inventory, and we're starting 2022 at the lowest amount of inventory we've ever had in Sherwood. So what's going to happen in 2022? Well, I don't know. No, seriously, though, what's going to happen is we're going to see the same kind of market unless the Fed intervenes. And all signs are pointing that they're going to intervene. Just yesterday, January 5th, they came out and said, hey, we're gonna potentially do this faster. And so, well, what does that mean? Well, the Fed wants to fight inflation, and they've been buying these mortgage-backed securities, which artificially keeps interest rates low. Okay, and they're going to stop buying those mortgage-backed securities, and then they're going to start selling the ones that they bought, which is going to go to the open market. And open market investors actually want what? They want a real return, unlike the government, who only wants a 0.00025% or whatever they're getting returned. They're getting nothing. So when it goes to the open market's going to want an actual return, which is going to push the Fed rate up. And trailing behind that are going to be the treasuries and the 10-year bonds and everything else. And that's going to impact the mortgage rate. So if you've been considering refinancing your house, do it now. Don't wait, because in the second quarter or third quarter of 2022, you bet your bottom dollar that the rate's going to be higher than it is today. And if you've been thinking about buying, whether it be in Sherwood or Estacada or out of state, you should really get on that, because rates are going up, guys. That's a fact. It's going to happen. It's going to happen this year. I can't tell you if that's going to slow the economy down enough where they start buying the mortgage-backed securities again or the bonds again. That's what happened in 2018. They stopped buying them. They started selling them. And all of a sudden, it slowed everything down enough that they had to start buying them again. I don't know if that's going to happen. I can tell you the rates are going up in 2022. So if you've been thinking about buying, thinking about refinancing, now's the time to do it. You can still get a 30-year fixed for around 3%, 15-year, maybe a little bit less than 3%. If you're an investor looking for a rental, you're going to be somewhere around 4%. Hope this is educational. Thanks for tuning in. Really appreciate it. And thanks for the referrals. We really appreciate it. We got a lot of referrals last year from clients and friends. It was a majority of our business. We really appreciate that. It's a lot of fun working with you guys and your friends. So keep sending them over. We'll keep taking great care of them. And Happy New Year to you guys. Stay safe, stay healthy. Call, email with any questions about real estate or anything else. Talk to you soon. Bye.